Welcome to the Prudent Pulse. Now, the slightly hawkish tone we got from last week's Fed meeting was validated by today's PCE inflation report. PCE, or personal consumption expenditures inflation, is the Fed's preferred gauge to consider when managing monetary policy. Well, it came in at 4.1% for May, which was the highest in more than 3 years. That being said, while inflation ran high, consumer spending also came in stronger than expected at 0.7% for the month, and first quarter GDP was revised up to 2.1%. Additionally, recently last month's payrolls jumped by 172,000 jobs. That was more than double the initial consensus. What all of this means is that inflation is hot alongside a very resilient economy, all of which is exactly the combination that will keep the Fed leaning towards rate hikes. At this point, the market is pricing in a 60% chance of at least one rate hike by September and close to 1.5 rate hikes by the end of the year. Now, critics will point out that much of the overall economic activity has been driven by tech-related investment, which is true. Investors do want to see some evidence that the hundreds of billions of dollars being invested will be worthwhile. Well, the tech sector passed a big test this week. Micron's earnings on Tuesday were significant. Sales rose 346% from a year ago, and the company locked in $100 billion in guaranteed sales through 2030, while also hitting 84% gross margins. This may provide some relief to a sector that has seen some sharp profit taking recently. And that's the Prudent Pulse.